and treating it like a business. And, this week I want to kind of go into more, just whatever some of you guys, I know you got to hear, if you're doing virtual, you got to hear David and Nick go over a bunch of that this morning. Yeah. Okay. Sounds good. Okay. And again, a lot of people, it's kind of half and half, we have a decent amount of people doing virtual. We've got a decent amount of people still at home. So, we just really like this call list is based on dialing, scheduling, booking appointments, all that kind of stuff. So, if you have specific things you need help with, that was my whole point. ADHD. Oh my God. If you have specific things you need help with, put them in the chat, and I'd like to go over some questions because we didn't get to do all of that last time. So whether it's leads, struggling on this, hey, I'm getting this objection. How many times do you dial these types of leads? How many times do you dial these types of leads? Pretty much everything that, now, if you're working something different, okay, I can do that. Okay, good. I'm going to do that based on the vertical leads. So, or the ethos leads. So anything your guys are struggling with on the phone or in the home, put down in the chat. And I want to cover as much of those as I can, because rather than me just rambling about a bunch of garbage, not garbage, it'll all be good stuff, but just stuff that I'd rather, if you have a specific thing like, hey, I'm getting this objection in the home, or hey, what's your flow when you do the conversation? Put those in the chat. And then while you guys do that, let me do a couple quick announcements. So let me put this on here. If you haven't seen it pinned in the Telegram, so there's two events. Well, there's 3 events going on. This upcoming weekend, if you're in the West Georgia or Atlanta area, Nick Greco is going to be flying in for 24 hours to do about 30, 40 miles west of Atlanta. We're going to be doing a virtual, and there'll be some about in person, but mainly going to be covering virtual and annuities. So if you're in Atlanta, or if you are in the West Georgia area, definitely don't miss that. That's going to be from 12 to 4. The place is called The Grill. It's in the calendar. Hold on. What's that place called? The Grill. It's in Bremen, Georgia. Okay. That's where a bunch of our West Georgia people live. And it's going to start at 12. It's going to go to 4. We're going to include like pizzas and food and apps and stuff like that. Drinks are going to be on your own tab, but we're going to include all the food. And then we're going to hang out for a bit after. Okay. And then Nick gets to the airport that evening. So we're going to do dinner, drinks, food, lunch, all that stuff. Okay. Aaron's going to be speaking. I'll be speaking, and Nick's going to be speaking. Nick's going to be doing the majority of it. But that's going to be really, really good. So that is this upcoming Saturday, 12 to 4 in the Georgia area. Okay. Get the details for that. I posted the flyer. Hit me up if you don't have that yet. Obviously, as you guys know, Stage to Success, the next big major event, that is going to be in, let's see, 2 weeks in Burlington. So if you don't have your tickets for that, there's still some extra ones floating around. If you need a place to stay, I know a few of us have Airbnbs. I know Janet's got one. I've got one. But there's, I think mine might be booked. I don't know. But some people are staying at Airbnbs. Some people are staying at hotels. You're going to get a really large amount of points for Thailand. Awesome. The big events are always great. All right. And I was just down in Florida with Robbie and Brandon and Clay and some of the corporate staff. And they have some really unique things lined up there, like some really, really good talks. There's going to be a lot of how-to and nuts and bolts stuff. So don't miss that. That'll be great. The main thing you're not going to want to miss, okay? The first weekend of May, it is pinned in the Telegram group. For those of you guys who were on the call last week, we have our Vegas event, okay? If a lot of us are going to be speaking there. Hutch, Aaron, Helgeson's going to be doing a ton of training there. He's obviously number 1 with our ethos leads. Nick's going to be speaking. I'm going to be speaking. We're going to have mainly all of our top leaders speaking at that one. So the booking link is already live. It's $50 to go to that. That literally just covers the cost of the room. All right. We still don't even break even on the room because the room is like $3,000 to $4,000. And so if we get 50 people there, we don't even break it. It's just so we don't eat it hard on the room. That's what that's for. Okay. We're also going to be doing a cool promotion. Stay tuned on that. We're going to be announcing that soon. For the Vegas deal. Okay. You're going to want to stay Saturday night. Okay. Most people are flying in Friday morning. Okay. So if you're coming from the East Coast, you can book like a noon flight. You get in there. You're flying back into time technically because you're going from Eastern to Pacific or whatever. And then they're flying out like Sunday morning, Sunday afternoon or whatever. Okay. So most people are getting in. If you're like, hey, can I go early? Yes, you can go early. Can you stay late? I'm getting in Wednesday, leaving Sunday afternoon. That's what I'm doing. Going in, gonna have a little fun there, and then get ready for the training. So first weekend of May, we're staying at Planet Hollywood. We have really great room rates. I think some of the room rates are like $129 a night. I mean, really, really cheap. So as you guys know, from most major airports, you can go to Vegas Direct, go make one big sale that pays for your round trip flights, your ticket, your hotel. Just go sell one policy for $100 a month that pays for your whole stay and trip. You're not going to want to miss that. It's our annual Legacy Life deal. And we're not doing it in Burlington, North Carolina, or North Dakota, or wherever. It's in Las Vegas. We're going to have some fun. Okay. So, all right, let's get to some of the Q&As things. Give me 1 second. So some people ask me this. I'm just going to go over some of the stuff that people have been asking on basic scheduling, asking great questions to keep people on the phone long enough to get the rapport building. So I work current client leads and ethos leads. That's all I work. Okay. And I also work my current clients who I wrote 3 years ago, 3.5 years ago, and all that kind of stuff. But one of the things that I do after I get through the initial, hey, David, this is Mike with Legacy Life. You started an application with one of our companies, Ethos, and didn't complete it. Was the price too high? Did you get kicked out? Once you get through that initial script, and then you're trying to build the why, after I get the initial what they were looking to do, one of the questions I'll ask is, or if I'm working a current client lead and I go through their whole policy or whatever, one of the things that I ask is I'll just say, hey, Marissa, help me understand when you were applying for this, okay? There's always a reason behind it. It's not like people are bored and just searching for life insurance and all that kind of stuff. What was your main concern? Was it, hey, were you looking for something for mortgage protection? All right, do you owe any debt on the mortgage? Is it just, hey, I just need something for funeral and final expenses? Or is it, hey, I'm getting ready to retire in this, and based on the age of the client, I'll ask specific questions. If they're 30 years old, I'm not going to say, hey, you're getting ready to retire. You know what I mean? So it's, you kind of, when they're in their 50s, 60s, 70s, hey, funeral and final expenses, is that. But I like to ask when I'm building the why, what was your primary concern? Because people have a slew of different reasons for applying for life insurance. I'll say, Marissa, people will apply for life insurance for, they have a mortgage and they know they're paying $2,000, $3,000 a month, $1,600 a month. And they know if they passed away, that debt would go to their spouse and they don't want to do that. You know what I mean? That they have a business, they have this, they have that. And I'll list off 4 or 5 things that it probably is going to be one of those things, and then go from there. And then I'll say, oh, tell me more about that. How long have you been in that business? And then that's where you can keep. So I get the original reason. Okay. So for example, a lot of times people are doing, as you guys know, a lot of these people are filling it out because they want to protect a mortgage or loss of income. You're writing a lot of Transamerica. So let's say the guy's name is Joe, and I'll just say, okay, Joe, sounds good. For whatever reason, Ethos, and this is something I say, Ethos is great, but they're not even in the top 10 when it comes to pricing. It shows you one AI generated quote, and 95% of the people that we find are getting priced way too high on there. So thank God you filled this out, because if you'd have gone with them, and I'll say something like that. Okay. And then I'll just say, but before we get into, I'm happy to send over all the numbers. I'll say it like that. I'm happy to send over all the numbers, email you the quotes. I ain't going to email them the quotes. I ain't going to do that, but I'm happy to do all that. But before we get into that, Joe, kind of tell me, this is going to help me out big time. Kind of tell me when you were applying through Ethos, what was going through your head? What triggered you to even get on there and do it? Was it, hey, I have a mortgage. I want to, my wife stays at home with the kids. I don't want to leave debt. Is it, hey, I just want funeral and final expenses? Or, hey, if something were to happen to me, my family really heavily relies on my income? Or is it, hey, something were to happen to me, and if they're like later in life, and I'll say some clients they do it for this reason. Some do it for this reason. Some do it for this reason. And I'll give 4 or 5 things that will typically be one of those reasons. You know what I mean? Because a lot of times your clients are going to give you these generic, just if something were to happen, you know what I mean? And then you people go from there. So I'll just say, okay, tell me what that looks like for your specific situation, John. Are you working? And I asked about the beneficiary. I'm like, okay, when you were applying through Ethos, were you doing it to leave something to your wife? Were you doing it to leave to your children? Do you have to protect a business loan? Like, what was the original? Oh, well, I want to leave it to my wife. Okay, tell me more. Now, is your wife working too, or does she stay at home? Would you guys have kids? And now you start, boom, boom, boom. You start, playing catch, throwing the ball back and forth. Oh, sounds good. Okay, she stays home with the kids. Hey, look, and I'll give reasons that it's crazy. My wife does the exact same thing, but here's the thing. If she didn't do what she could do, I couldn't do what I could do. I'm sure you're in the same boat. Like, if something were to happen to her, obviously you're looking for insurance for yourself, but if something were to happen to your wife, who's going to take care of the kids now? Okay, are you able to work the same amount of hours you're doing now, or who's going to take the kids to school? Who's going to change their diapers? Who's going to do this? Have you ever really thought about what that actually would look like if something happened and you start having those conversations? But you've got to be able to keep them on the phone long enough to do that. So if they give me some generic, once I get through the opening line, have 4 or 5 things that's like, hey, Joe, when you filled this out, obviously I'm going to send over, we have way better numbers than Ethos. Okay. I could give you the top 5. They're not even in our top 10 for pricing, not even close. Okay. They just do the most advertising. So that's the one that you see always advertised on social media. You see the commercials, all that kind of stuff. But typically what we've been finding is a lot of our clients have been very unhappy with the prices they've been getting with Ethos. And then they call around at a few different places and find out they're way overpaying or whatever it is. And I say, what's cool about what we do is we're a one-stop shop. So rather than you calling 30 different companies, this guy tells you this guy tells you this guy tells you this, he tells you this, then they triple the price on you. I have a special, and I'll just say I have a special program. Rather than you taking hours and hours and talking to all these, half of them, to be honest, are dumb agents, you know what I mean, who only work for one specific company and are trying to sell you that. I work for all of them, and I can type in your height, weight, and it gives me the top 5 companies in the marketplace for your specific situation. So I'm not loyal to Transamerica or this Mutual of Omaha or this company. I work for all of them. I'll send you the top 5. And then what ends up happening, I don't send them the top 5. I'll say, hey, like, this is the best one. The other ones are about $30 to $70 a month more. I can send them to you, but I mean, this is the one that I would do if you know what I mean? But basically you're saying, I can shop everything for you. I'm your guy. You should stop looking, hold on one second. Okay. So you get into that. There's specific things that you want to say. Okay. Hold on once. There's specific things that you want to say on that. Okay. So then they tell you the reason, and a lot of them will flat out tell you. But you like Nick and David say, the amateurs they'll go right into quoting mode, and that's terrible. This is the same if in the house when you're finding the why. If it's for funeral and final expense, if you're dealing with final expense. So here's some of the things that they'll ask me. People getting kicked out of the Zoom. So let's say it's for mortgage protection. Okay. And I have another policy. So, and I'm writing all this down. So let's say Joe's 48. Okay. This is the conversation you should be having with Joe. Okay, Joe, you're 48. Okay. You're looking to get something set up to cover the mortgage. Sounds good, man. That's what we find most people are looking to do. And that you say something like that, hey, that's what most people are out there doing. And that's what a lot of their financial advisors are recommending them to do for blah, blah, blah. I'll say something like that. That's what most financial advisors are telling people to do, because if something happens to them, that debt goes straight to their wife. So when you say, that's like a little dig, that's like, hey, that's what most financial advisors, not require, but really advise their clients to do, is as soon as they take out a mortgage, that's their biggest debt. They need to go protect that mortgage. So you're really smart for filling that out. Okay, so Joe, you're 48. How old's Tamara? She's 39. Now Joe, are you, how long ago did you take out the mortgage? 4 years ago. Okay, what's the total left you owe on the mortgage? $375. Okay. Okay, and then what are your mortgage payments? $1,900 a month. Okay, something like that. And I'll say Tamara's your wife. Okay. Now, are you guys dual income? Is she working too, or did you guys have kids? And she stays at home with the kids. Okay, she stays at home with the kids. Okay, sweet. How old are the kids? Well, we got 4. They're this age, and I'm writing. Oh, sounds good. Oh, you got a 12. Oh, holy smokes! You got a 12, a 10, an 8, and then a 1. I'm like, oh man, I bet did y'all think you were? And you say a joke like, if they got like an age disparity in the kids. 12, 10, 8, that sounds normal. The 1-year-old, hey, was that planned? You say like a little funny joke, right? And I just say, hey, Joe, look, I know this is the reason you're even applying, but I'll just say, hey, you took out that mortgage, and you said, what do you do for work again? Okay, and I'll figure out, is he a business owner or is he employed? And I'll say, Joe, are you just looking to do something to protect the mortgage, or are you looking to protect your loss of income as well? That's another good question. Are you just looking to protect the mortgage if something were to happen, or are you looking at loss of income as well? And they're like, well, what do you mean by that? I'll say, look, a lot of people don't think about it like this, Joe. But for example, ballpark, pre-tax, okay? And I'm not putting it on the application. Well, some of the companies are going to ask, what's your annual income? But approximately what's your take home per year before taxes, okay? And if you're a business owner and you make $300,000 a year and you claim 60, that's fine, just approximately. Okay, I make $120,000 a year. Okay. Joe, it's not that I care what you make, but this is how I did it for me and my wife. I make X amount, and I'll tell them what I make, but let's say I make 50,000, I make 100,000. What I did, now you have a debt of 375. So we at least need 375,000 to cover that mortgage. Don't you agree? Okay. She's staying at home with the kids. If something happens to you, number 1, she's got to go get a job. Okay. Number 2, daycare. Do you know what daycare costs look like for 4 kids? Not good. Okay. And then I'll also say, you're bringing in 120,000 a year. Okay. Not only do we need to cover the 375, but how fast will she start after we pay off the mortgage? Because let's say we only did 375, how soon after we pay that off, because at least that's done, is she going to be missing that 120 grand a year? Pretty damn quick. Because if that 120 grand a year, because they say, well, where are you getting at with this? Here's where I'm getting at. If let's say you want the average person will try and get at least 3 to 4 years of income protection. Okay, of income protection. So meaning outside of the mortgage. Because, okay, we have the 375, that's paid off. At least she doesn't have mortgage payments. What about the car payment? What about food? College to it? Do you want your kids to go to college? This, that, clothes, sports, whatever. Just because the mortgage is paid off, that doesn't mean your wife's in a good situation. You know what I mean? And I'll say the number one reason women have to get remarried is because the spouse didn't provide them with enough income. It's very, very hard to be a single mom raising 4 kids, okay? They need help, okay? And if your wife wants to get remarried, and I'll say it in my speech, I'll say the reason I did it is because if my wife wants to get remarried, I'm all for that, but I don't want her to have to do it out of money and her choose the wrong guy and it ends up being a not good thing. And you kind of put this picture up there of like you're turning a sword in their chest of like, okay. And that is true. That's the number one reason widowed wives have to get remarried is because of money, which kind of sucks. But and depending on your rapport with the client, you got to know when to say that. Okay, if you do that too soon, you screw yourself. And this is after the rapport's built. Okay. And I also say, well, Joe, we got the 375. You make 120 grand a year. How many years of your income do you want your wife to have to? Do you want Tamara to be able to grieve before she's got to figure her stuff out? He goes, what do you mean? Well, let's say we only get 375 plus 120,000, so that's a total of 495,000. At least, yeah, we pay off the mortgage, which is great, and then she's got 1 year of your income. She's used to that 120. Not only are you a loving husband and a father, but you're a money-making machine. As soon as you die, that 120,000 a year stops. So how many years do we want to give her before she's got to go back to work? That's a good question. 1 year, 2 years, 3 years? And I'll just say, and they're like, well, what do you recommend? I'll just say, I have 7. You know what I mean? But not everybody can do that. I've got 7 years of my income. So, the average, they say most women really never get over it emotionally if something happens to their spouse, but they definitely don't get over it in a year or 2 years. So I always try and tell my clients, if you can get 3, that's pretty awesome. So now you move the premium from 375,000, which is the mortgage, plus 120,000 a year times 3. So now he needs 360 plus 375. So I'm like, if you do $1 million, now you've got some extra money that we could start putting away for kids' college. She could put it towards retirement. She could do this. She could make upgrades to the house. She could pay off the house, go buy another house, and then rent that house out for income. So now she doesn't have to get a job. You got to be able to explain not just you can't just explain what the money, you have to explain not the money, but what the money can do. I'll say, think about it like this. Paying $1,900 a month. Let's say you get a $1.5 million policy. Okay, that's, I don't know, at 48, let's say the guy's pretty healthy and it's for 20 years. Okay, at least till all the kids are out of the house. Transamerica, if he gets standard, it's probably going to be like $190 a month. $190 to $230 a month. Okay. So then what you do is you say, look, you get a 1.5. I said, Tamara, if something happened to Joe, if something happened to you, would you want Tamara to have to go to work? No. Here's what a lot of people do. This is what the most successful people I know do. This is what a lot of financial advisors recommend they do, is they'll go get something that's in your specific situation about 1.5 million. And you're like, why does she need that much? It's not so she can go buy a Bugatti. Okay, that's not what it's for. You pay off the house. She can either stay there, rent it out for income for $2,000 a month, and then she can go buy 2 or 3 more houses. Okay, not have to get a job, use that income for rent. Now she doesn't have to get a job. She can still stay home and raise the kids and have 5, 6, 7,000 a month in rental income. So are you explaining what 1.5 million does, or are you explaining what it can do for them? You know what I mean? And people think, oh, and then what they'll end up saying is, oh my God, I've never even thought of it like that. That's how you get higher premiums. You know what I mean? And that's again, that's on a specific type of person. Okay. You can do the same thing with final expense. Hey, do we just want to cover the funeral, or do we want to leave the grandkids a nice little going away gift? Maybe they can put that down to a down payment for their first car. I'll say it like that. Do we just want to cover the funeral, or do we want to leave them a nice going away gift? Something to really remember you, and something that, imagine, Joe, that your kids are in a not good spot when that happens. Like that extra 5,000 or 8,000 or 10,000 extra on top of the funeral is going to make a huge, they can take an extra week off from work. They can take 2 weeks off from work. They can properly, most people, they only get enough to cover the funeral. and then they got to go right back to work, which great. We covered the funeral, and then they got to go right back to work. They can't even properly grieve your passing, their mom. Whereas like what a lot of parents I know that are asking me now is they're trying to leave extra. So that way, let's say their son makes $1,000 a week at work, they can get an extra 5,000 to 10,000. Their son can take a couple months off from work and properly grieve and not have to freak out about going back to work to make money. You're not just selling $25,000 policy instead of a $15,000 policy. You're selling what that extra 10 grand will do for their kid, which is absolutely true. If you've ever lost a parent, you know that the last thing you want to do is go right back to work. Like your mind's not in a good place. You need proper time to grieve and process. So don't sell in any lead. Don't sell what the face value is. Sell what the face value will do. Oh my God, we get this $2 million policy. Joe, obviously it's going to pay off the house, going to pay off the cars. We can put money into the college tuition. But if you put the rest of the 1.5 million into something that's gaining 7, 8, 9%, she can live off just the interest of the money without ever touching the principal. Boom. You know what I mean? Or she can use it for real estate, buy houses or whatever, right? That's what you do. All right. Any questions on that? If you want me to go deeper on that. I just think that's something that people don't really do. They just sell the numbers and they don't sell what the numbers actually do for people. And they lose people, because it's too transactional. It's not this, they are paying money. You have to realize these people pay money for something they never get the benefit for. It only benefits when they die. They never see it. So you're selling them on emotion. Okay, you're selling it on what it's going to do for their kids, their wife. And if they're a good person, they want to do all that stuff. I've got groups of life insurance, you know what I mean? So I want to do the right thing for my kid, my wife and my kids. They're going to be fine. You know what I mean? But I also make a decent amount of money and I need a lot of life insurance because if something were to happen, their lifestyle dramatically is not good, So don't just sell, it's what people are like, $1 million. Oh, I can get you that. It's okay. First of all, why do you need that million? You might not need that million. How do you know you don't need 1.5? Why'd you settle at $1 million? Is that what your financial advisor told you? Or are you just like, no, I just want $1 million. Sounds good. Dig deeper on that stuff. So, you could do the same thing with final expense, especially if they really, really care and love their kids and I'll just say, hey, let's say it's Wanda and she's 67 and her kids are going to be the ones handling the funeral. I'll just say, Wanda, are your kids in a decent financial position right now? Or are they kind of like the rest of us, check to check? Check to check. Okay. I know you want to get at least $15,000 to cover the funeral. But have you ever thought about this? Do you remember when is your mom still alive? Passed away. Do you remember what you were going through when that happened? Or do you have a good relationship with your mom? Yes. Did it tear you up pretty good? Yeah. Do you think it's going to do the same thing to your kids? Okay, sweet. And they're working jobs. Do you want them to properly be able to grieve and celebrate your life? Or do you want them to have to go right back to work? Okay, here's what we do. Boom. You got them. I mean, Jesus. You got to be able to ask those questions. So, people didn't ask anything in the chat. So next week, what I'm going to do is like an hour before we get on the calls. If for any of you guys that have more things that you want to hear or whatever it is, but again, life insurance is a complete emotional sale. It is the only thing I know about that you pay for that you never get to see. I mean, maybe car insurance too, but then if you get, you don't have to die for, you get rear-ended and stuff like that, whatever. But life insurance only pays out when you die. Okay. Oh, here's a question. Hold on. How do you break down to someone? Oh, this is going to be good shit right here. How do you break down to someone who can't qualify for what they want? If you are talking to a level-headed individual, which only half of them are, maybe less, So I'll say, Haley, you know how life insurance works, right? And they're like, yeah, or no. And I'll just say, have you ever bought a house before? You know that what that process is? What getting a mortgage is like? Do they get you a mortgage because you're a nice guy or because you qualify for it? You got to qualify for it. So here's what they look at. They look at your debt to income ratio. They look at how much money do you have to put down? What's your credit? What were you doing 5 years ago? They look at everything because they can't afford to be wrong and have you not. Okay. Same thing with the insurance company. So just because, like, I want a $5 million house. I mean, I really, really do. Like, I want a Ferrari, I want a Bugatti, like, I want all that stuff. But it doesn't really matter what you want. It matters what do you qualify for. Like, I could go down to the Bugatti dealership and the Ferrari dealership and I'm like, I really want this. They're like, okay, are you going to pay cash or are you going to finance it? And then I'm like, yeah, well, it doesn't matter what you want. Like, I would love to get it to you. It's what do you qualify for? So with a mortgage, it's your debt, it's your credit, it's this, it's that, it's that. So I give a great example. With life insurance, we all know it's based on your age and your health and what you're willing to pay. Okay. So I'll say, John, 25 years old, completely healthy. I could get you a $2 million policy for $47 a month. I can. You get Transamerica Preferred, 25 years old, 2 million, 47 bucks a month for 20-year term. 65 years old and kind of jacked up. So then you have to sell them on, hey, and I'll tell a story. I'll say, look, a lot of people end up not getting anything because they don't get what it's like, just because you don't qualify for a Ferrari, does that mean you're not going to drive a Honda? What are you going to not have a house because you don't get a $5 million beach mansion in Buckhead? There's no $5 million beach mansion in Buckhead. But just because you still need to live. Like, do you not think, okay, I'm sure, and this is what I'll say, Haley, I'm sure you want to leave. Let's say they're like, oh, I want 100,000. I'll say, I bet you want 1 million. You probably want to leave your kids 1 million. But it really like at the end of the day, they are going to have to stroke a check to the funeral home. Are we going to get pissed off because we can't get 100,000 and leave them? Imagine your kids at the funeral and there's no life insurance and them looking down and be like, why? They'll be like, why didn't he at least have something for 15, 20 grand to cover this? This is a pain in the butt. Something is better than nothing. If I told you, if you just wait till next week, I'm going to give you 1,000 in your bank account. Are you going to be pissed because it's not 100,000? Your kids will take something over nothing. Something shows that you even that you cared about it. Nothing shows because you didn't get what you want. Then, and I'll say, Haley, I'm not the one. My job is not to piss you off. My job is just to tell you that I would get you 2 million, but I don't own an insurance company because I'm too nice. I would give everybody all the coverage and I'd go out of business. Okay. I don't own an I just tell you what you qualify for. 5 years from now, 7 years from now, 12 years from now, you're going to pass away. 50 years from now. Don't you think your kids are going to be glad you at least got something? Yeah. All right. Well, let's get this for now. If you can find something that's legit, it's 100,000 and it's cheaper than what I have, it's better. And I take a look at it, I will gladly help you cancel this. But in the meantime, rather than you getting pissed off and doing this and doing that, rather than having nothing, let's at least get this. Because if something happened, you know this 20,000 is going to go a long way. It doesn't. I know you want 100,000. Hell, I bet you want 1 million. But you can't. But you can't. You got diabetic neuropathy. Okay. I want a Ferrari. I don't qualify for a Ferrari. I want a beach house in Hilton Head. I don't qualify for that. I want to play in the PGA Tour, but I suck compared to those guys. I don't qualify. Life doesn't get you what you want; it gets you what you earn, what you qualify for, right? So you got to explain it in a way, and you don't say I see. What you'll say is like, hey, buying insurance is very similar to qualifying for a mortgage. If you've ever done that, you know exactly how that works. Your credit, your history, Have you ever been bankrupt? What's your income? What's your debt to rate? You know, how long have you been working this job? Like they go through everything. Insurance is very simple: health and age, and budget. Because yeah, you can get that much insurance, but it's 65. You got COPD. It's not going to be cheap, you know. So you got to be able to talk people down on like, okay, you see, the main goal is this, okay? Your kids at some point are going to plant you in the ground. Don't you think when they're at the funeral, overlooking everything, or they have to deal with the funeral home and pay for everything out of pocket, waiting for your assets and funds to the funeral homes will not bury you until they have money up front. And average time it takes to get, like, they're going to have money up front. Don't you think that 15, 20, 30,000, even though you wanted to leave them 100, 150, 200, don't you think they were like, I'm at least glad he did this, rather than be like, well, why the hell didn't he do something? That's how you talk to them. And I say it just literally like that, like a G on the phone. Okay. They want $1 million on 3 types of insulin, overweight, wants to spend $200 a month. I mean, the same thing. But here's the thing: they know. And I'd get them something. I'd say, look, let's get you this for now. If you can ever find $1 million in coverage that's legit, you need to tell me who that is right now, because we're going to bring them on board. Actually, that company would go bankrupt. Never mind. So across the board, it's going to end up being like that. So you've got to be able to explain. So one of the things I'll do is I'll say, hey, when they're like, oh, this is what I wrote, I'll just say, hey, look, John, you know how life insurance works, right? You've been around the block. You know how life insurance works. When you're young, healthy, it's dirt freaking. You can get a $2 million policy for $40 a month. When you get above 50, when you get above 60, when you get above 70, you know what life expectancy is, right? That's how we'll expect what. The closer you get to life expectancy, the higher it's going to be. We all know that. And especially, that's if you're healthy. Now you throw in some health challenges, you better hike that thing up. Yeah. You can't let these people walk all over you. You need to be able to be like, John, come on. Come on now. Don't give me that BS. All right. Anything else? Which is, honest to gosh, if you've ever if you've ever tried to go through, like, it is a rigorous process. You can't be like, well, this is what it's like. They're the one that is loaning you 400 grand, 500. They can't afford to be wrong. The insurance, okay, you guys know how underwrite, there's actuaries and things like that. Think about it like this: the insurance companies can't afford to be wrong too, because let's say they give someone $100,000 term who's 73 and has COPD. They know at 73 and having COPD, the average person at 73 that smokes and has COPD probably has 3 to 5 years left on average. So meaning, for $100,000, and let's say you're paying $300 a month, which would never happen. That's only $3,600 a year. So $3,600 a year, and if you die in 4 years, let's just call it $4,000 a year. That's $16,000. You think the insurance company wants to collect $16,000 and then 4 years later pay out $100,000? Close your eyes. No, not a chance. They're in the business to make money, not to lose money. They'd all go out of business. Okay, that is why it's expensive. Okay, why can they give a $2 million term policy for a 25-year-old for 30 years for $60 a month? Because life expectancy is 80. They know 97% of people are going to outlive those. Okay, but a 65-year-old is not. 25-year-old, yes. You've got to be able to explain this stuff to your clients, so they you explain it in a nice way where they kind of feel dumb, but in a nice way. Okay. You don't want to say, look, you dummy, don't do that. Just say, look, John, you know how that is. 65 and health challenge is going to be way up there. Okay. Life expectancy is this. The insurance companies can't afford to be wrong. Okay. Just like TSA cannot afford to be wrong. They look through all that little crap. You get all mad that they're searching for your cologne through your cologne. But then when you're happy when you land at your destination safely and someone doesn't blow up your plane. Okay. If the insurance companies didn't charge a lot of money for older people for life, they'd all blow up, which is the absolute truth. When insurance companies go out of business, it's because they have dumb underwriters and dumb actuaries, and they sell products that they don't charge enough for. And now they end up paying way too many claims and not taking enough in, and they go out of business. All the company, the reason why we work for all the best companies, they've been in business for hundreds of years, and they're smart. So you ain't gonna outsmart us. So anyways, hope that helped. Next time we're gonna dive into some more, and I think we wrap it up next week. But remember, Atlanta, we've got this upcoming Saturday, we've got Stage to Success, and then we've got our big May event. So it's all being able to, just to recap this call, explaining what that actually looks like when the money gets in their hands. How many, obviously, do we just want to pay off the mortgage, or do we want to protect your income as well? That's a great question, because they don't know what no one has ever asked them that. They're just like, oh, here's $1 million, it's $100 a month. I'll say, John, do we just want to cover the mortgage, or are we trying to protect the income as well? Well, what do you mean? Well, most people I know, or most people out there, they're saying, hey, obviously I want to protect the mortgage because I don't want to leave that debt to my wife, but I make 60 grand a year, 80 grand a year, 120 a year, 200,000 a year. And what people are thinking is, how many years of that do I want to leave my wife? Because yes, that's amazing that we pay off the house. What about the car note? What about kids? What about this? What about this? And you start naming the TV bill, Comcast, all that. They're reliant on your 60, 80, 100 grand a year. How many years of that do you want to leave? That's how you become a pro of figure. And you're not just trying to get more premium, you're actually caring, because you're trying to figure out, because if something really did happen, everybody wishes they would have got more. You know what I mean? I had a lady, a current client last year. I'll wrap it up with this. This is crazy. This is literally nuts. She called back to get something on her kids. And her husband, okay, so I tried to replace the policy and I couldn't do it. I would have done it with Trans. I'm glad I didn't do it. Long story short, she was like, well, I think I'll just cancel it then. I'm like, no, you should not cancel this. This is a good policy. This was back in like 2020, end of 2022, when I started working with CCL leads. She's a California lead. So I tried to replace the policy, couldn't do it, whatever. She's like, nah, I really don't even need it. Like, he makes good money, I'll be fine. The dude dies from COVID like 6 months later. And she calls me bawling and thanking me for not doing it, because she got the check for $1 million. She goes, you know what's funny is I wish I would have done more, because he makes $220 a year. And after, they had a $650,000 mortgage. They live in California, so the cost of homes is 3 times more than here. And she goes, I've almost gone through the whole $1 million after paying off the houses and the cars. And now we have to move. And this was the guy that had $1 million. And she called she was going to cancel the policy, and I talked her out of it. I didn't make any money. It was a term that had already been written, but I was like, oh, I can't beat this. Like, you just need to keep this, and the cost to convert it would have been astronomical. So it's just crazy. She called me back bawling like 6 months later when they got the check. I have like 5 or 7 stories like that. I've got some crazy stories, but what we do matters. What we do, obviously we're talking about getting premium, getting this, doing that, but if you care about people, like, people are going to die. All of us are going to die. All of us are walking claims. Okay. Nobody's 180 years old walking around. We're going to die at some point. Are we going to leave our kids a little? Are we going to leave them a lot? Are we going to leave them in debt? We're going to leave them money so they can go to college. We're going to pay off the house. We're going to do what we need to do. And you've got to be able to explain all that to people. So love you guys. See you next week. Let's go get it.